Joining us now are Mr. Arun Jain, Chairman of Polaris, as well as Mr. Jitin Goyal, the CEO of the company. Gentlemen, thank you very much for joining us. Mr. Jain, let me start with you. I'm comparing like to like after your, your demergers. The revenue quarter on quarter is a little muted. Dollar revenue is actually down 0.7%. What's the trajectory? I mean, why is it muted? And when can we expect you to come to industry level growth?
Yeah, I think this is some of the revenue which is shown, which I clarified on investor call. It was $76.22 million, moved to $77.5 million in actual terms, but because of consolidation of the subsidiaries, this shown the muted one. So it's not something very big number. I would say it's still a flat quarter, but I think you appreciate that it's a major shift in the organization, and the new leadership team has come and we created two companies. So it's first time happening in the industry where one IT company is being demerged into two different set of businesses. I think I'm very happy that these two companies remain stable during this period. Nothing has gone wrong during this life cycle of the change. And change was too big for me, and change too big for everybody who was there in the company. So I'm happy to remain steady, and that's what we planned for when we took this journey 2 years back.
Okay. Mr. Jitin, just wanted to get you in on this conversation as well. What is the outlook as far as the margins are concerned? And if you could tell us specifically, for the services business, what kind of trajectory are you hoping to see as far as margins? Jitin?
Well, let me put it like this. This is a new dawn for the services company. Can you hear me?
Yes, we can. Go ahead.
Can you hear Jitin?
Okay. Yeah, it's a new dawn for the services company, and the management of the company is absolutely laser focused on three very clearly defined agendas: to achieve consistent and predictable growth, to pull the margins back up to 15 to 16% EBITDA range in the next financial year, and to push attrition down to levels where we can be industry leaders in that space. And these are very clearly defined agendas, and we are taking all the necessary actions so that we are able to come back to the market and deliver numbers that will make all of us feel good.
Okay. Well, gentlemen, we have we have our viewers also coming in with their questions. That's a facility we give them. So we've got this question from one Manoj Sharma. He writes to us from Kanpur.
Okay.
And he wants to know the medium-term guidance for the EBITDA margins for the services business, which currently stands at about 12.5%. I think, Jitin, that would be your question.
Yeah, I mean, I think I already addressed that to some extent. The internal targets that we're setting for medium-term EBITDA margins for the next fiscal year are in the 15 to 16% range.
Okay.
That's what we're targeting, and all of the actions that are being taken are driven towards making sure that that's the kind of range we should be able to deliver in the next fiscal.
Okay. Mr. Jain, is the company done mostly with its portfolio rationalization that it has been undergoing for the last many months?
Yeah, that has been done. I think Jitin has put the strategy together in a first quarter, and with that, the second quarter has shown a minor increase. So portfolio rationalization is done. I think the new 9 wins during the quarter is a signal that the strategy starts showing some results, and it may take 1 or 2 more quarters to really translating into coming back to the industry norms in next year. So definitely I think this demerger has helped the company to bring back into the differentiated space of digital risk, payment and data, and that's where the new company is focusing at with under leadership of Jitin and his management team.
When is it likely to list, Mr. Jain?
The product company likely to list We have filed all information memorandum with the National Stock Exchange. We are just waiting for their approval. So once approval comes, it should be listed within 2 weeks' time. As soon as we get the approval, most likely before the end of this calendar year, we should be listed.
Okay, since this is the last time I think we'll be speaking with you as MD of the company, Mr. Jain, what was the reason for which you relinquished this position?
I think 21 years of my time is spending in this company to build a business model when outsourcing was not even existing. It was just coming the shape. When first report of McKinsey came for $85 billion, nobody believed into it. And to now, I think the model has been established, the world-class delivery has started happening. Now it's a time when I feel there's a team which can handle it, team which is mature, and it gives the company a different, I as a chairman can give a different perspective to the company on 3 dimensions. One on strategy side, second on mentoring side, and third on connecting customer with the solutions. So keeping slightly at a 5,000 feet away from day-to-day work, I believe that I can contribute better connecting solutions with the customer, which in a role of a CEO, when you are daily running on the quarterly numbers, you may sometimes lose the focus on the customer or lose the focus of investor or a strategy.
Fair point. Just a final question to you, Jitin. You gave us a fairly clear idea of where your internal target on margins is. What's the internal target on growth itself? Because you are still a distance away from the industry average. And after this rationalization, what has been the feedback from clients? Do they see you as a fitter team, or are they still waiting for things to settle down at your end? Are you able to force better realizations at all, or even get more orders?
Oh yes, no. I think I can say without any ambiguity whatsoever that the clients love what we've done. The reaction from the clients is absolutely fantastic. They see us as a fitter, and then fitter can be also, said in more precise terms, as a more agile company, as a company that is a lot more laser focused on providing real expertise and with a lot of accountability. That's some of the things that come from being relatively small. So small can be beautiful, and many of our clients are seeing us that way, and they just love it. And I think, to reiterate some of the points that Arun was making earlier on, if you look at the last quarter, we've signed up 9 new clients, and these clients are ranging from insurance companies to central banks to tier 2 banks in places ranging from Australia to Singapore, to the United States, to Canada, and so on and so forth. So there's a fairly wide acceptance of our strategy to be a specialized company that delivers digital solutions. And digitizing the enterprise is really what our mission is, and that's a mission that we are very, very well equipped to deliver to our clients. So, therefore, when we're talking about internal targets for the next fiscal, I would like to see my team take the company back to industry standard growth levels, and also bring the EBITDA numbers to the range that I was talking about. So I think we feel very, very excited, very energized, and as I keep telling Arun that we are now a $300 million re-startup, and it's a company with a fantastic DNA. We've got a great track record, and at the same time, with all the changes and the demerger, it almost feels like a fresh start, and so it's a great place.
Yep.
And we feel really, really good about where we are going with this.
Point taken. Jitin and Mr. Jain, thank you very much for joining us. Feeling like a startup. You can say that to a media company. Every day feels like a startup when you look at the kind of news that hits you. Thank you very much, gentlemen, for joining us.